Welcome to the daily update, where I'll go over the action in the market for Wednesday, December 3rd, and we'll see how things look for Thursday, December 4th. Another kind of a sleepy day, but a positive day. And we're seeing still a market that's looking positive in the short, intermediate, and long term. We did have a number of economic reports that were released, but it didn't seem to have that much of an impact. The market is pretty much still counting on a rate cut next week. And if that doesn't happen, that's really going to cause some problems. But as I usually say, the Fed should do what the market is telling it to do, and the market is telling it, hey, we want a rate cut here. So in the meantime, things are a little bit slow, a little bit lethargic. We're still not trending in the short or intermediate term. We're getting close, and we're still defaulting to the positive side, but we're not seeing an awful lot of conviction. And we're still seeing in the bigger picture where growth is underperforming value, and that still suggests more of a defensive market. Now, on the other hand, you could say, okay, the rest of the market is participating in this, and that's good. That means the broader market is improving. But to really see some sustained upward move with the indexes, we need the mega caps, large cap growth, those areas that have more of an impact on the indexes. We need to see them show some real positive conviction and growth in general really improving. And we're just not seeing that all that much. It's not falling apart, but it's not improving either. Okay, so before I get into the video, I have a thing called the SPX investing program. It's free. Check out the link that you see here. And there's also the link in the description below this video on YouTube and Rumble. And all you have to do is provide an email address from now until the end of 2025. It gives you free access to everything that I post. All right, so right at the open, we had a lower open and we opened at the 68.10 level, and that set the intraday low. So that was positive in that aspect. We climbed above the unchanged level, so then we went positive and we went above the daily pivot at 68.29. Then we stayed above the daily pivot. We didn't see a lot of selling, at least initially, after we started going up. We would see a drift off later on, but we climbed above R1 at 68.52. We hit resistance at the 68.60 level, another round number, probably not as impactful as like 6800, 6850, the big round numbers. And then we declined going into the close. That's not a real vote of confidence there. We went down below R1 and we closed at the 68.50 level. Again, probably more of a established round number that's becoming more of a technical level as well. So we were up 0.3% on below average volume. We've been seeing that. It's been picking up. We're seeing volume increasing, but it's still below average overall. We're positive on all three time frames, 20, 50, and 200-day moving averages. So we're above that based on price. And we did see a bit of a drop in the 10-year yield, but that just hasn't been as much of an impact right now. But we always want to keep an eye on that anyway. Okay, so some comments. Bitcoin is still attempting to rebound, and some of that is feeding over into the NASDAQ 100. The correlation is still not really strong, but it is getting a little bit stronger there. That's why we've been keeping an eye on this. And growth continues to underperform value. That's kind of the biggest problem that I'm seeing right now. But we've been seeing that. It started to develop last summer. It's continuing. It's still there. It improved a little bit in Wednesday's session, but we need to see lots of follow through for this to really change. And there's still great optimism that there's going to be a rate cut next week. We still have on the negative side a confirmed Hindenburg-Ullman. It initially triggered back in October. We've seen confirmation spikes since then. We'll see how that ends up playing out. And we have an unconfirmed SWAG NYC breadth thrust. We still have until Friday for that to be an official signal. Now, if it doesn't really trigger a signal, it can still end up being positive anyway. But where it gets a lot more notice is if we do get this actual signal, and that can be quite positive for the market. So what we've been seeing now for the last couple of weeks is we have a confirmed negative big picture type of signal, the Hindenburg-Ullman, and an unconfirmed positive big picture signal that are kind of at odds with each other right now to see which one's going to happen. Now, we're still seeing pretty good short-term momentum with the Stochc RSI, Williams percent R, and stochastics. Now, we don't have the CCI charts on here. They're usually on here when we're seeing more positive conviction, but still, it's pretty good for right now. We don't have anything extreme in the intermediate term and no change to the overall scenario. We're just waiting to see how next week plays out and if the rate cut is going to happen. And then what is the Fed going to say in their statement? And then when Jerome Powell has his press conference, what is he going to say there? Because it was at the last meeting that kind of started this negative wave that went on for a while until the week of Thanksgiving when things finally started to bounce and recover a bit. And the dollar was down. Now it's still in an uptrend longer term, but we see that quite often. We see a cross with the moving averages and then and not just the dollar, but it seems a little more pronounced with the dollar, but other markets can do this too. We see a cross, either positive or negative, and then prices move in the opposite direction right after that cross. And interest rates were down. We're at 4.06% with the 10-year yield, where after Tuesday we were at 4.09%. And we're improving now. We're not extreme negative with sentiment, but we're still quite negative here at 26. We were able to get back above that 25 level where we had been at 24. And we're not trending still. We're trying to show a bit of a trend in the short term, but it's not quite there yet. It is positive with the green line above the red line, but we're below 20. We're below the moving average. And with the update, the bias is positive, and I'm still keeping the momentum at mixed to positive. And again, mixed is mainly because we're not really seeing growth outperforming right now. Okay, we did get a slew of economic data, which is kind of strange compared to what we've been going through over the last month or two. But every week we get the MBA mortgage applications index down 1.4%. In the previous week, it was up 0.2%. This was a little bit of a shocker here with the ADP employment change. It had a decline of 32,000 jobs where they thought it was going to be up 20,000. Now, this could also bode well for the rate cut. It's like, okay, we're seeing a little bit of weakness here. Maybe the Fed needs to come in and lower rates, and that might help things in that area. But we're going to be getting some more employment data in Thursday's session, really initial and continuing claims. We're not going to get, at least based on what I'm seeing, we're not going to get the employment situation report until next week. And then the last time we had this report from ADP, it was up 47,000. So it actually declined here. Then the import prices were unchanged. Last time they were up 0.1%. When you take out oil, they were up 0.2%. Last time it was up 0.1%. Export prices unchanged. Last time they were up 0.1%. If you take out agricultural products, still unchanged. And last time it was up 0.1%. Industrial production came in as expected, up 0.1%. Last time it was down 0.3%. Capacity utilization. It's showing some weakness here, and it means that not all parts of factories and big machines and things like that are being used. That could actually help the inflation situation because when everything is being used at full capacity, it's like, okay, sometimes that can bump up prices. But it came in at 75.9. They thought it was going to come in at 77.3. Last time it was at 75.9. So the same reading that we saw before, but they did expect it to go up, and it didn't. And then the global U.S. services PMI, again, the takeaway from this is that we're above 50 at 54.1. Last time it was at 54.8. The big one was ISM services, still above 50, showing expansion, a little bit higher than expected. It came in at 52.6. They thought it would be 52.4. And last time it was at 52.4. So that was a bit of an improvement there. So here are some charts. We look at this every week. We're actually down in the latest reading with the mortgage applications. ADP employment change. Last time we had an increase here. Now we're seeing a decrease in how the employment is changing according to this chart. Then industrial production. Well, we're seeing production going up and capacity utilization going down. So again, this might help the inflation situation just a little bit there with utilization going down, but companies are still producing more. So that's kind of a sweet spot according to this. And then here's just capacity utilization, just a little bit under that 676 level. Month over month, industrial production was up, where last time we saw a decrease. Then the ISM, and we're going back up and we're above 50 here with the total reading. Now, this could be somewhat inflationary here. We've been going up with the yellow line, which are the prices. And then here's some Isabel Net blog charts. Another clue for a strong December. It just shows if we are above 5% year to date, well, we are. We're in double digits by the end of November. This is what typically happens after that. These are the years where it happened, the median and the average over here, and we tend to be higher every time. So that also bodes well. And then excess liquidity expects modest stock rally in the first half of 2026. Okay, so apparently by looking at this chart, you can see they're circling it here. This is counting for excess liquidity, and that liquidity quite often will find its way into the stock market. Then Bitcoin is down more than 30%. Now it's bounced back up since this chart was made here, but it took a pretty big hit. It declined about 30% and got down into the 80,000 range. Now it's getting back up into the 90,000 range. And then you might want to pause and look at this. This is just a spreadsheet of what, according to Deutsche Bank, are the economic forecasts and the different reports that are going to be coming out. Then here we says we expect reserves to be slightly above the 3 trillion by late 2026, assuming reserve management purchases begin in January. Okay, you have to assume things, but this is Fed's liabilities with projections, and it just kind of puts all of them out here with the reserve balances, and then reverse repurchase agreements, other liabilities, and things like that. And kind of the takeaway I'm getting is that we are seeing this going down as the Fed balance sheet has been decreasing. Then this is just mainly for informational purposes. When you look at the MSCI World Index, 64% is made up of US stocks and then the other accompanying stocks in that particular index, which also feeds into an ETF. Risk appetite, it's dropped to zero. Folks are a little bit on edge right now here, and which is kind of strange because this little diamond here is actually above zero. So, but folks are a little bit more apprehensive currently. And then cold feet. This is people that buy a house and then they back out of it. They cancel it. It's actually going up a little bit, but not as high as it was in previous years. The ADP, this feeds into the ADP employment report that we've been seeing here, where we're seeing a gradual drop off here. So private payrolls negative over the last 3 months. Over the last 3 months, small businesses have cut 178,000 jobs. By contrast, large firms have added 143,000. So just kind of but most people work for smaller companies. Average daily share volume, both on and off the U.S. exchanges, because there's a lot of stuff that happens away from the exchanges. And this actually works to our advantage. We like volume. This is one of those rare things when you're dealing with the stock market and the options market and all the different markets. The more the volume, the better it is. It's like the more the merrier because the bid ask spreads are more friendly. It's easier to get in, easier to get out. If you're in a real illiquid market, you might put in an order that may not be executed, where the more volume is in a particular market, that actually helps you to get in and get out quicker. And then the NASDAQ 100 streak, it's closed higher than it's open for 8 consecutive days. What has happened when we saw a similar thing looking out 9 months later with a gain of 15.6%? That's kind of the takeaway here. The further out you look, the better the returns end up being. And then return drivers, the returns in 2025 have been powered mostly by earnings, which is sales and margin growth with some multiple expansion. And that's good. That's why we keep an eye on these things. Sales growth and margin expansion, that's a big chunk of what is really driving the results that companies are seeing. All right, so here is the chart. We did have a lower open, but then we set the low not too long after the open and then came back up to the unchanged level, got above the daily pivot, kind of stalled here at the 68.40 level. Again, another round number. We did break above the 68.50 level and we got above R1, but then we topped out a little bit above the 68.60 level and then a bit of a decline going into the close. So that's always a little bit of a concern when we see a drop off here. But we did hold on to some gains, but we had been looking better during the day and virtually unchanged in the initial overnight session here. And the futures were making a gradual comeback after they were looking more negative. And then we have the positive action that happened during the day. This is still a little bit of a concern, but not really falling apart. We would like to see the blue line above the red line. That would mean growth is outperforming value, but still it's looking okay. But the blue line is really lagging behind the red line and not really seeing an improvement here with S&P growth to value. This continues to chop along sideways, and this is not what we want to see in a real solid environment. We want this ratio to really be going up. So on an end of day basis, growth was up less than value, more than half as much. It was up less for the mid caps, but up a little bit more for the small caps. So we're still looking all right here with the small cap growth to value ratio on the end of day chart, but we're still just coming back into the high end of this recent range that we've been in. Improving, but looking negative now, still with the mid cap growth to value ratio, and still we're just at the high end of the range where the index is and improving, but still not all that great here with S&P growth to value. And the longer we stay down here, the more we're in danger of seeing a death cross with the growth to value ratio. And that's not what we want to see if we're more positive. We want this to get back above both of the moving averages and really show some leadership. And actually declined here with this growth to value ratio, and we're inside the rainbow. A little bit of an improvement trying to get back above the 50-day moving average when we look at discretionary to staples. So that is looks a little more promising there. When you look at the discretionary, we're breaking above the 50-day moving average. We're still in a downtrend with staples, but we're above the 50-day moving average, but still below the 200-day moving average. And this is where we're flatlining right now with the short-term trend based on the ADX, but we are still positive with the green line above the red line. We're just on top of the moving average and we're below 20. That's why we're not trending in the short term. We're still declining slightly here with the intermediate term, but we're positive with the green line above the red line. And we're still below average with volume, but it is picking up a little bit here. This was last Friday with the half day, Black Friday. We have been improving with volume, but still below average overall. Then we're still green here with the gamma exposure chart. We're right around the 68.50 level if you round this up. And so that's a round number closer to where we closed. Now we're not quite seeing as much overhead resistance right now with the blue lines intersecting the line that's going left to right here. So this is still more positive than negative for the time being. And we did get the latest reading from Investors Intelligence. They continue to drop down here. They're actually more neutral. We had got above that 4 area. That's when the market just kept going up and up and up, and they're recommending buy, buy, buy with those people that make recommendations. We've seen that really come down lately. And we are dropping off, but we're still slightly above the moving average with the Ulcer Index. We did decline with the VIX, and we're underneath the moving average both with the line chart and the bar chart. And when that goes down, we see the volatility of the VIX also ticked up just a little bit here on a closing basis. Some of that late day selling might have come in to bump this up just a little bit, but still in the bigger picture, it's below the moving averages. And we declined a little bit here with this fear gauge. We also declined slightly with this fear gauge. So there's confirmation there of some fear coming out of the market. A little bit of a pickup, but not a big change with the daily equity put call ratio. But we are declining, and this is more positive with the 5-day chart continuing to go down. Now, the 10-day chart did not update at the time I'm getting ready to record this, but it was starting to roll over a little bit. This was negative as this was really starting to go back up. Now that stocks are starting to go up, this likely is to continue to go down. And it's still looking okay here with the risk on to risk off ratio. It continues to climb, and in the bigger picture, it's going up. That's positive for the market. And we're going up with the high beta to low beta. That's also positive for the market. And haven't shown this in a while here. We're improving. When we look at the weighted discretionary to staples, we're going back up there, so that's encouraging. Then we look at the equal weight discretionary to staples, that's also going up and showing some improvement. The tech sector compared to utilities, that's also been improving. Biotech, which is growth, to healthcare, which is value, that's also improving. And we look at hotels to utilities, that's been improving as well. So we're seeing some, it's generally positive. We're just not trending and seeing a lot of conviction when it comes to large cap growth right now. And we're still below the band here with the volatility risk premium, not showing an awful lot of fear coming into the market that way. And we did go up, but we're not quite back to the all-time high with the advanced decline line based on price. We did go up a little bit here. We're not quite at an all-time high based on volume, but still looking positive overall. We ticked back up above zero with the short and intermediate term advanced decline ratio. This continues to improve. The advanced decline oscillator above zero and advancing. And internally, we're looking pretty good here. We did see a bit of an expansion of new highs, really no new lows. So we're going up nicely here with the 5-day chart and the 10-day moving average chart. We're positive with all three of our smart money indicators again. We're above the moving average longer term. We're above the moving average shorter term here. We continue to go up and seeing a nice little bounce with the chicken money flow and the red line's going up. That's positive. And we were negative with the chicken oscillator after Tuesday. Now we've turned back up and we've crossed back above the moving average after Wednesday. So all three smart money indicators are back to positive, but we're still negative with the vortex. The red line is above the green line. And improving here with our advanced decline line studies above the moving average and going up here with the NYSE common stock, turning back up with the S&P. Mid caps are starting to go back up above the moving average, as are the small caps. And then those stocks in the S&P above their 20-period moving average, we were dropping down here. We're starting to go back up, looking fairly healthy for the time being. Also above 50 and advancing with the 50-period moving average study, still above 50 and going back up with the 100 moving average study. We never did drop below 50 here, but we're going back up with the 200 moving average study. So there was some technical improvements in our different charts. And then here we appear to be breaking this series of lower highs now. We've been able to hang on to these gains as we've been chopping sideways. We're still above this pivot point for November, and then a little bit below that is the pivot point for December. So we'll be watching this if we do see a pullback, just a little bit above the 50-day moving average. And on the bottom, we are below average with volume here. A little bit of an improvement after declining with the 20, 50, and 200-day moving averages on the S&P. This is where we're still seeing fairly good positive short-term conviction here with the Stochk RSI and the Williams percent R. We're not, it's not bad, but we're not extreme here with the CCI 14 or the CCI 20 chart. And the short term stochastic, that's getting pretty extreme, and that is positive. We are extreme, but rolling down, slowing down a little bit with the intermediate short term. We're above the midpoint, above the moving average, and going up, so that's positive with the long short term stochastic. And we're still positive with the force index. We're 0.6% away on a closing basis from the all-time high. So we close up 0.6%. We just might be setting a new all-time high with the S&P. Still looking okay here with the short-term trend. We're above both the blue line and the green line based on price, and the lines are going up. And then shorter term, we're above the 10, 20, and 30 period moving averages, and the lines are going back up as well, even though we've been chopping along sideways. And we're still more than 10% above the 200-day simple moving average. We just want to watch that. That could mean we're getting more overextended in the longer term. And we're getting a little bit into the +2 channel with the standard deviations chart. So a slight improvement there. Now we switch over to the intermediate term where we had been declining with the balance of power. Now we're going back up and it's also above zero. That is positive. We're positive with the go, no go, darker blue bars. And we're still above the midpoint, but just kind of chopping along sideways with the highest high, lowest low value chart. And we're actually turning even more positive with the TTM squeeze. We're above zero, starting to turn blue. It's a light blue. So this momentum oscillator is positive, but we're still below zero with the ease of movement. That just doesn't seem to want to improve. And we have been moving kind of quickly over the last 10 periods. That's what standard deviation measures. So we're still above the moving average here. But the maroon still has this as negative, a drop off in sellers, but also a drop off in buyers. That's the green line. The difference between the two is the oscillator that you see on the bottom. And we're still above zero and ticking back up here with the S&P McClellan oscillator. So we're going up with the summation index based on price and volume. We're also improving with the NYSE McClellan oscillator and still above zero. So the summation index for the NYSE is also advancing based on price and volume there. So we're seeing some improvements. But we're still negative with the Swenland trading oscillator. We're declining based on price. We're declining based on volume. Momentum is shifting and trying to turn back more positive. We're above the moving average now with the PMO. When we break it out based on price and volume, we're above the moving average and advancing. And ticking back up and still above 50 with the PMOs that are rising. We're still going up with the buy signals. That's positive, and we're still going up with the PMOs in the S&P that are above zero. Positive with the Elder's Impulse system, positive with the parabolic SAR, positive with the short-term slope oscillator, positive with the MACD. So we're turning more positive in the short and intermediate term. We're trying to turn up and look a little bit better here in the long term. We haven't quite crossed back above the moving averages with the TRIX or KST. We are positive with the Copic curve, positive with the Sean trend meter, still below 50 though with the money flow, above 50 and going up with the ultimate oscillator, above the moving average with unbalanced volume. It's not showing an awful lot of strength, but we're still above 50 with the intermediate and short-term RSI charts. And we continue to go up. We're still seeing point and figure buy signals being generated inside of the S&P, above 50, advancing, and above the moving average. So this is positive. We continue to go up with the NYSE bullish percent index and the NASDAQ 100 bullish percent index. Intermediate term trend, we're still hanging out just a little bit above the blue line. As we do that, the lines are starting to go back up. So we're looking okay now with the intermediate term trend condition. And when we just look at simple and exponential moving averages, we are positive. We're plotted above all of them. And now we have another one that went away for a while. This is a praying bottom fisher, and I have it kind of near the end. I treat it more as a novelty chart. We don't necessarily make decisions based on this, but this is now producing a buy signal. We'll have to see if we get more confirmation. Now, we are looking positive. It's just we're not trending right now, and that's what's keeping us from really looking at doing any more directional type of strategies. Okay, support and resistance still doing okay here. We're below this pivot point here that would offer overhead resistance right at about the 7,000 level for the S&P, and we're well above this other pivot point here on the weekly chart. And we're looking okay here with the trend. The hike in ASHI is positive. We're black and pointing up with the Kigi chart. We're positive with the Renko chart, positive with the three-line break chart. So that way we look at trend, we're doing all right. Longer term, where we did see a tick down after Tuesday, now after Wednesday, we're ticking back up slightly with the 150 and 200 moving averages here. This is what we're waiting to see if it will happen. Is the ZWAG NYC breadth thrust? We had the initial signal back on November 20th. We need to get up to this red line by December 5th. Now, again, we're not going to know this probably until Monday because there's a 1 day lag with how this chart updates. And this shows what the statistics are when we get a ZWAG NYC breadth thrust. The further out you go, the better the results are. And we're still working off of a ZWAG NYC breadth thrust that was triggered back last spring after we came up out of the April lows. This also shows even when we get close, but we don't necessarily trigger an actual signal, the results are still pretty good going forward. All right, then we look here at everything being positive across all the different indexes and all the different time frames. Still negative in the short term based on bonds. We're negative in the short term with the dollar, and we're also negative in the long term with dollar, but I have us as being positive since on the weekly chart we're still in an uptrend. And the only sectors that ended up being down was communication, that's growth, but then utilities were down slightly, but not very much on a percentage basis. We had energy bouncing back up a little bit, financials, but they've got a long ways to go to start outperforming the S&P. Discretionary was up over 1% as well, and that's helping the discretionary to staples ratios. But we have tech down here about in the middle. We would like to see that higher than it is, even though it was positive. And then the only things that happened for alerts were that the earlier in the day, the Nasdaq crossed below 23.4 and then 23.3. That was it. So not an awful lot being triggered from that perspective. So over here, the tech areas, we were down. Microsoft down 2.5%. Just some AI news that's coming out there that has some folks concerned about some things. Down a little bit over 1% with Nvidia. Apple was also down. You had Broadcom down, and Oracle apparently it didn't do much of anything. Both of the Google stocks were up here, but Meta was down. So there's a lot of canceling out of each other. Amazon was down. Tesla had a pretty good day, and that helped the discretionary sector because it's such a big stock. And so the Dow was up 0.86%, still above this pivot point for the month of December, and we're above the 50-day moving average. So that's still leaning more positive. We're positive with the Elders Impulse system, and we're also above the pivot point for the Nasdaq and above the 50-day moving average there as well, but it was up 0.17%, but still positive with the Elders Impulse system. The Nasdaq 100 actually showing a little bit more strength, but still only up 0.2% above its 50-day moving average, also still in an uptrend. Positive with the Elders Impulse system, positive with the momentum for the Nasdaq 100. And right now we're coming back to the high end of this recent range with the S&P 600 small caps and not really at a range here. We have a little ways to go up here to get back to the high end of this range with the Russell 2000 small caps, but positive after being neutral with the Elders Impulse system and just kind of chopping along sideways with the mid caps, even though it was up 0.73%. It hasn't broke out above these recent highs that we've been in, but it's still positive since we're above the 50-day moving average, and the 50-day moving average is right on the pivot point for December. And we've gone from neutral back over to positive with the Elders Impulse system. The Wilshire chopping sideways above its 50-day moving average. We're above the 50-day moving average with the total U.S. stock ETF. We came down to the 50-day moving average with the FANG index, but we're able to close up off of that even though we were down 0.65%. And this is part of the growth. This is Facebook, Apple, Amazon, Netflix, Google, Nvidia. This is not taking a real leadership role right now, and that's why we're in a more trendless environment, even though we are still looking positive. So Apple was actually down after setting a new all-time high. Microsoft down 2.5%, still above its 200-day moving average. Coming down here with Amazon, still above its 50-day moving average. And Google was up 1.21%, but not back to an all-time high, at least yet. And then Meta below both moving averages. And if this doesn't improve, we're in danger of seeing a death cross here with Meta. And we're still below the 50-day moving average, down over 1% here with Nvidia. And then Tesla was able to break up above its 50-day moving average, up over 4%. Netflix also just about ready to generate a death cross here. And that's negative after this chart had been quite positive for the last number of years. Then the Dow Jones Semiconductor Index was actually down a little bit, but still above its 50-day moving average, where the SMH Semiconductor ETF was up 1.37%. So it's showing a little bit more strength above its 50-day moving average. This is still looking good here. The semi to tech ratio, that is positive for the market, and this is what we want to see. But we want to see not only this, but other areas of the market also show more positive conviction that we're not seeing right now. And we're still above this 100% level with the weekly chart of the Dow Jones Semiconductor Index. So we just want to keep an eye on that. That's when, on a longer term basis, this starts to look overextended. And then here's the correlation between Bitcoin, which is trying to go back up here, and we've been going up with the Nasdaq 100. The correlation is getting a little bit stronger. They're going in the same basic direction at the same time with a little bit more conviction now. I wanted to show this too. I haven't shown this in a while, where we're really improving here with the semiconductors. They're going up. We're going sideways, but we did bump up a bit here with the home builders after it had been going up. It likes the idea of a rate cut, and the more conviction coming in that that is what is likely to happen, the better the home builders do. Transports are improving here, and retail also tending to improve. And then the regional banks are holding up okay, not breaking out, just coming back to prices that they've all been at before, but they are going up for the time being. And we're tending to go down here, which is positive when we look at the staples to tech ratio. So that's positive. And we're up a little bit. We're getting back into the 59 range when we look at oil. And we continue to drop down into the 98 range now with the dollar index on the daily side. Still coming down a little bit. Not really a problem with the 10-year yield here. We've just been chopping around in the low fours recently. And we are above the 50-day moving average with the 10-year based on price. And we are showing a bit of improvement with the Qs to S&P. We want this to keep going up and see the moving average turn back up. We're slightly above the moving average with discretionary to the S&P, but we're declining and below the moving average when we compare large cap growth to value. This is kind of the weaker area. This is what's keeping us from really showing a strong trend right now, is this ratio going down. So we're below the moving average with the large caps, improving, but below the moving average with the mid caps, above the moving average now with the small caps. We'll see if that ends up helping the small cap index. And ticking down for the most part here with the staples to S&P ratio. And that's more positive when this is declining. And then we have the Hindenburg Omen here. No additional spikes recently. We're still working off of the initial signal and then the confirmation spikes to see if this feeds into something that turns out to be more negative. So what's our outlook then for Thursday? We're positive on all three time frames. We're going to be getting initial as well as continuing jobless claims. And then later in the day should be the trade balance. Not really a major impact with that. We'll see what that has to say. And then the geopolitical things going on, lots of things there, but what ends up having a direct impact on the market? There's real life and then there's stock market, and sometimes the two are quite disconnected. So here we have Thursday, and then this is what's slated to come out in Friday's session. We'll see, and that's going to be big with the core PCE coming out. And this just shows the initial jobless claims and then what's coming out for Friday based on the calendar. Then seasonality, neutral to positive with the Dow for December 4th, where we are more positive with the NASDAQ. So a little bit of a lean positive there with the NASDAQ for that. And we do see a little bit of a bump up here before a little bit of a drop off. It's typically the second half of December that performs better than the first half. And that's borne out by this, where the first half, it does okay, but the second half tends to do better. More Christmas cheer floating around at that time. This also shows how December tends to be positive going back to 1950 as well. This also shows in the second half of December how things tend to improve. And this says, well, because if you remember back in 2024, we were down for December. And it tends to not happen very often that we have two down Decembers one year after the other. So we'll see. That might be digging for data that may not be relevant, but still, if it's a number, people like to make a statistic out of it. This also shows the positive seasonality going into the end of the year, as does this chart. Keep showing these charts every day, but we're not really seeing much movement right now. This also shows positive seasonality there, and this is also showing positive seasonality heading into the end of December. All right, so we're still negative in the short term with our growth to value and discretionary to staples ratios. The ease of movement is still below zero. The swell trading oscillator continues to decline based on price and volume. The money flow is negative and the vortex is still negative. And we have the confirmed Hindenburg Omen, which is in the background. And whoops, this should be positive. The Pring bottom Fisher buy signal. That should have been over on the positive side there. And then our three smart money indicators are back to looking more positive again. Longer term, we're still in uptrends with the growth of value and discretionary to staples ratios. We're positive and showing a bit of an improvement after Wednesday with the S&P and NYC McClellan oscillator, and we continue to go up with the summation indexes. And our momentum is improving and starting to switch over and look more positive there. The parabolic SAR is positive. The bullish percent indexes are still looking pretty good across the S&P, NYSE, and NASDAQ 100. The ultimate oscillator is showing some real strength right now. It's positive. And the momentum for the NASDAQ 100 is positive. And we're still in an uptrend with the financial sector, but I stopped showing that chart. I just show it now in the intermarket analysis video over the weekend, how it's underperforming the S&P and the longer term special K. Both the daily and weekly charts are positive. And then I wanted to show this just because these are daily pivot points. They're posted on the YouTube community tab. I'll also include this. I don't include this chart on the website. I could, I suppose, but we're seeing a little bit of overhead resistance here with this R1 pivot point. So that might limit some upside potential. It could be more positive if we end up breaking above that. The ones that I pay most attention to are the intraday pivot points here, and this is what they're set up for Thursday's session. So our conclusion hasn't been changed. We're still seeing pretty good momentum. We're still positive, but we're not trending. And we're also improving, positive, but not trending in the intermediate term. We are positive in the long term, but we're more than 10% above the 200-day simple moving average, which might suggest that the market is overextended. But we've seen that quite a bit lately, and it really hasn't led to anything, at least to this point, but that could always change. Thank you. I hope you have a wonderful day, and I will talk to you in the next video.